The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
All right, hey guys, welcome back to another not live trading session, but another webinar series, which is Build Your Trading Strategy. And today we'll be covering the first part of this series, which is scalping. Okay, so as usual, remember that everything in this webinar is educational in nature and nothing should be construed as investment or trading advice. So please remember to do your own due diligence before you guys trade, okay? All right, so for today, I'm your host, Woon Hong, and I'll be going through with you guys on how to build your trading strategy. And I'll be going through with you the first part of this series, which is scalping. Okay, so the second part of the series is day trading, and last part of the series is swing trading. All right, so for notes, Eddie, let me see. Give me a second. Okay. Can you guys see my screen now? The projected PowerPoint slides? Okay, great. All right, so okay, so for the agenda for today, we will be going through what is scalping, and then we'll be going through how much time do you need to scalp, how much leverage do you need to scalp, how much capital do you actually need to scalp with, and lastly, three powerful scalping strategies that I can share with you guys on how you can formulate your own trading strategies or use these strategies to scalp as well. Okay, so firstly, what is scalping? Basically, scalping is a fast-paced, exciting, and mind-rattling um, strategy all at once. So it's more suitable for people that don't really have much time to look at the screen for long, as compared to maybe your day traders or your swing traders. Okay, so it's short time periods between the opening and closing of a trade. So usually scalping consists of mainly price action and also your very simple strategies, for example, your Fibonacci, your key levels, and then monitoring it on either the 15-minute chart or 5-minute chart. Okay, and your main goal is to grab very small amount of pips within a short amount of time and risk very small amount of pips. So you can risk maybe ranging from 5 to 15 pips, and your target is maybe 10 to 20 pips. And you're always, usually for scalpers, you like to take advantage of market volatility. So market volatility would range from your London session, the start of your London session and New York session, or the overlap of London and New York. Usually scalping won't really take usually scalpers won't really trade during the Asian sessions because your Asian sessions are mainly slower and has lesser volatility. So usually they will start from scalpers will start from 3 to 4 p.m. Singapore time, which is your start of the London session. And usually those timing would have um, some news and also either 9 p.m. or 8 p.m. Singapore time, sometimes even 8:30 p.m. They will also scalp because um, these scalpers will take advantage of the market volatility and news trading as well. I've known a few friends of mine that like to take advantage of news trading, so they marked out their key levels and see how before the news actually comes out, they will actually trade. They'll actually open their positions maybe 3 minutes before the news open, and then they really have their setups on hand, and they are out pretty quickly, maybe in less than 5 minutes, they're already out. Yeah. And you can grab a quick TP of maybe 30 to 50 pips, depending on the market volatility also. Okay. So why scalp? Right? You have your day trading, you have your swing trading, and also um your maybe your position trading, your news trading. So why scalp, right? So basically you're able to avoid known unknowns. So you're not susceptible to maybe unknown news. For example, like you miss out a news at 8:30 p.m., right? It doesn't really affect you because you're not holding your position for long. You're only holding your position for maybe maximum, I would say 30 minutes. Yeah. So you're always in and out of the markets pretty quickly with very small amount of pips and very tight stop loss. Yep. So you have your locus of control, 20 pips versus 200 pips. So what this means is that basically scalpers are not greedy. They usually exit their trades once they have hit their TP of usually 1:2 or 1:1. Very quick 20 pips TP as compared to your day trading or swing trading, because swing trading usually you have to hold your trades for very long, right? So maybe ranges from a week to 2 weeks or even longer than that, and your target is always above 150 pips, right? But as a scalper, your main goal is to enter multiple trades within a day and exit quickly of 20 pips. So you can have multiple 20 pips or multiple 10 pips TP. So in a day, maybe you can get like an easy 50 pip trades in total. Okay, so you also have new opportunities every time you open the chart. Because if let's say you're on the 5 minute, right? As compared to a 1 hour, day traders usually use 4 hour and 1 hour to look at the charts. As for scalpers, you are using either 5 minute, 1 minute, 5 minute, or 15 minutes. So each time you open a chart, you can see many candles. Um, so for a 15-minute chart, you can see quite a decent number of candles as compared to a 1 hour chart, because for a 1 hour chart, for each time you're looking at a 15-minute chart, right? Uh, four candles is equivalent to one hour candle. So you can see there's a lot of candles on the 15-minute and 5-minute charts, and you can see if you are a price action trader, means that you only focus on candlestick patterns, then this is very suitable for you, because each time you open a different pair or different chart, you can see that there are a lot of opportunities out there, and you are able to capture different opportunities, because you're able to see the different key levels, the different price action, candlesticks, etc. Okay. And next is, how much time do you need to scalp? So your holding time ranges from a few seconds to a few hours, but usually I wouldn't recommend few hours, because that's more of day trading already, right? Unless you are intending to hold your positions for long because you know that okay, price could actually reach this area of interest or grab liquidity at some point of time. But usually for scalpers, your max should only be up to an hour if you want to if you want to open multiple trades, right? So you want to be as efficient as possible to capture quick 20 pips. Okay, so 1 hour in the morning for Asian session. So you can sculpt for Asian sessions, you can sculpt maybe your JPY pairs, right? Your AUD pairs. Okay. But for AUD USD is slightly slower because the markets for AUD USD is not as quick as your major pairs, right? Like your GBP USD, Euro USD, etc. Okay, so for your 1 hour in the afternoon, you will only trade the majors like your London pairs, your GBP USD, your Euro USD, right? So those USD majors are very effective in the afternoon. So your London sessions, right? So 1 hour in the evening is allocated to your London New York overlap, right? Because that period will usually have CPI news, your NFP, your different kind of news to increase market volatility, and this could help you help those scalpers achieve their goal of maybe three quick trades in a day, right? So it's important to have proper risk management so you don't need to monitor the trades all the way. So usually for scalpers, what I notice is that they use they either enter manually or they use buy or sell stop because it allows them to capture the best price. Okay, and they always have proper risk management. So it's either 1:2 or 1:3 risk to reward ratio, and only risking 1% per trade. So in let's say you are trading 1 hour in the morning, 1 hour in the afternoon, and 1 hour in the evening, right? So you can allocate 1%, 1%, 1%. Or if you realize that if morning you're not doing that well because the markets are actually slower, then you can risk maybe 0.5% here, 1% here, and 1% here. So in a day, the max you can lose is 2.5% of your account. All right, okay. Next, how much leverage do you actually need to scalp? Okay, so for scalping, you need high leverage. Ideally, 1:100 onwards. And I know maybe some brokers have 1:500 or even 1:1000, right? Usually, I stick to 1:500. And for leverage wise, it's basically how much you can risk, like how much you're willing to risk, and but it doesn't really affect you if you're only risking 1% per trade, right? So you have proper risk management. You wouldn't have to worry much about margins or leverage. Okay, and you're only targeting low spread pairs because there's no point for you to scout um, pairs that have high spreads, right? Because, for example, if let's say your spread is uh 1 point something pips or up to 3 point something pips. So I know that goal is maybe could range from easily 2.5 to 3.5 pips for the spreads, right? So I wouldn't really recommend scalping gold for beginners because it's not very effective since you're paying commissions for the spreads. Yeah, you're paying commissions for the lot size, and also let's say you enter a trade, right? You're immediately in drawdown because of the spreads as well, right? So this is not as effective for scalpers if you have high spreads. So Euro USD is the best scalping pair out there, and next in line would be GBP USD because these are the lowest for majors, right? These are the lowest spread pairs. So there's some brokers that um, have zero pips or maybe up to 0.2. pips for Euro USD, and for GBP USD, maybe it ranges from 0.2 to 0.4, etc. Okay, so this low spread is very important for scalpers. Okay, then next, how much capital do you need to scalp? All right, so a good amount to start with would be ideally 300 USD, because you are able to scale with that amount. For example, you have a um, compounding um, compounding Excel sheet, and then you start with $300. So each time you are aiming 20 pips, right? So each time, if you are able to aim 20 pips and you're very consistent, so you can see um once, if you can do it with $250, then you can do it with 2,500, and also even better, 25,000. But don't rush into scaling your account, because for scalpers, since your trades are always so often, right, there are definitely losses and winners. But if you're consistent, if you're consistently holding a win percentage of, I would say 60% will be good enough. 60% of 1:2 risk to reward ratio would be good enough for you to scale your account already. And you're always aiming 20 pips, right? So each time you're risking 10 pips. So each time you're risking 10 pips to earn 20 pips, and then each three trades a day. So let's say you're hitting 40 pips a day is really good enough, right? Okay, so now moving on to the powerful scalping strategies. So these are very easy to understand, and if you guys have actually tuned into the Fibonacci series previously, it'll be easier for you to understand. Because for the Fibonacci retracement strategy and the Nike tick strategy, it uses a lot of Fibonacci. So, but don't worry, I'll go through with you guys how you can use. If you guys haven't tuned into the Fibonacci series, I'll be able to guide you guys on how to uh, trade, how to scalp using these strategies. Okay, so the horizontal pullback strategy is very simple. Basically, if you have at least 2 or 3 points for a resistance level, right? So you mark out this level right here. Okay, very simple, very effective pullback strategy. I would say it works best on the 15-minute time frame. For Euro USD, GBP USD, and also if you guys trade indices, it works very well for Nasdaq and uh your US 30. Okay, so these are what I've noticed so far. And don't worry, later on I'll go through these strategies on the chart itself for you guys to understand how you can apply it in real life, right? Okay, so very simple. You can see right here, you mark out this red box here. So this is your resistance. So imagine if price went up here, right? And is retracing down, back down. So you mark out this area. Okay, so your target, your buy entry would definitely be here. Your stops placed below the previous low, right? Your target 1:2. Okay, very simple and very effective strategy. Okay, so next you mark out your, if you're looking for sales, you mark out your support level over here. So it's ideally your demand zone here. Okay, so once price has break below this demand zone, right? This support level. Okay, so you should identify the break once it has broken the previous low. So you can see here, price actually made an impulse move downwards, breaking these previous lows, coming down, right? And price, we are expecting for price to retrace back up here. So once the support has become has been broken, it will become resistance, right? It's very foolproof, and it has been proven to work many times. So even though it's more of retail trading, but it still works, right? Because these levels, once the support has been broken, it will become a resistance. Once a resistance has been broken, it will become a support. Okay, so this is your very simple horizontal pullback strategy. Without any other confluences, you still can trade this, but I would say it's best if you have other confluences such as your um, price action candles right here, your Fibonacci levels. So you can draw from this high to this low. So you are only able to draw from this high to this low if price has retraced back up slightly, maybe halfway through, and then you draw your Fibo and see if I would say it's about maybe 61.8% right here, because here is probably 50%, right? So here would be 61.8%. Okay, so right, you also have your indicator, which is your Ichimoku cloud. Okay, so for your Ichimoku cloud, right, you can see right here, you can see that price is now, let's say price is here, right, and it's below the bearish Ichimoku cloud. So what we are looking at will be sales, right? So for example, if you draw a with support level over here, right, you just draw it out. Okay, then you can see that price has cut through here many times. Okay, so you can maybe expect it to either come up to here, this area, or this highs over here. Okay, so once price has come all the way to here, you could ideally look for sales, and price or your stop loss will be placed above these highs over here. Okay, so you have a confirmation that this is your overlap resistance here, and then your bearish Ichimoku cloud. So your direction is mainly bearish because you can see right here, price is making lower highs and lower lows, right? So price reaches here. If it doesn't make a if it doesn't break this high, then you're good to go. You can look for sells, right? Because it's continuing its bearish momentum of making lower highs and lower lows. Okay, so you can see right here, price will come here and then drop down. All right. Okay, so next would be your Fibonacci retracement strategy. Okay, you can see right here. Basically, if you guys don't really are not familiar with Fibo retracements, don't worry, because I can go through with you guys the main idea of Fibo retracement. Okay, you can see right here. What we are looking at essentially is obvious highs and lows, right? Because you can see these swing highs and swing lows are too insignificant. They are, how to see if they are insignificant? Basically, just look at how narrow and how short or long it is, right? Because if the more narrow it is, means it's not significant enough, and the shorter it is means that it's not a proper swing high or low. Okay, so they are bad to use for Fibonacci points. Okay, so you can see right here, these swing highs and lows are the ones that are significant, right? It's very high, right? It's longer than normal, it's wider than normal, right? So you see here, swing high, swing low, swing high, swing low, swing high, swing low, right? Very simple, very effective strategy. So it's also how you can practice looking at swing highs and swing lows. You can look at, you can practice it by looking at market structure on a daily basis. So later on, I'll show you guys how to properly look at market structure and look at your daily bias to see if you are looking for buys or sells. Okay. All right. You can see that in order for you to draw a Fibonacci trend line, right, which is this thin blue dotted line, you should only draw it from proper swing lows and swing highs. You can't draw from this swing low all the way to this high, because why? Price has cut through the structure itself. You can see this down move, this short down move here. Price cut through this short down move, and this invalidates the whole setup, because um, you should only follow the trend. So for example, you should only draw from this low to maximum of this high. Okay, but since we have a higher high, so you can draw from this low to this high. Okay, not cutting through this swing low all the way to this swing high. Okay. All right, so next, basically, you can see right here, this is the correct one. because we are drawing from this swing high to this swing low, right? So um you can see right here, sometimes like people get confused. So this is ultimately your swing high position and not maybe here or here, because you can see right here, this is the highest point and it's not that far apart. Like for example, by far apart I meant the gap here for this example is too big. But you can see right here, this example is not that big, right? It's kind of narrow, which is good because we have a proper swing high all the way to this swing low. Okay, so combining Fibonacci plus pullback. So usually people for Fibo itself is not that strong as a standalone, meaning that you cannot use Fibo just by itself. You need to have key levels aligning with the Fibo retracement levels for extra confluences. So you can see right here, we have the pullback resistance level over here, right? And then if you were to draw from this swing high all the way to this swing low, it aligns with the 61.8% Fibo retracement level. Sometimes it doesn't really have to be on the dot, but if it's close to your key levels, right, then price would roughly move either to your key level or to your retracement level. Okay, so we're expecting a sell from this area right here. Okay, so just a very quick in and out trade. Maybe I'll say 1:3. I'm risking maybe 10 pips. I'll put it above the retracement level, and then my target would be either a fixed TP of 20 pips or 30 pips. Right, so you can see right here, if I put my stop loss above this 61.8% Fibo retracement level, right? Price didn't touch it and came back down all the way. Even though I target only maybe 30 pips, but price actually went down all the way, and it was about, I would say, 35 35 pips total, right? Or even more than that. Okay, so you can see right here. Also, we have another confirmation here, because apart from drawing it from this high, right? We cannot draw from this high all the way to this. We can also draw from this high to this low, because price didn't deviate too much from or it only deviated one side, but not having a too big of a gap, right? So you can see right here, 50% Fibo retracement level aligning together with this 61.8% Fibo retracement level, which shows that this area has Fibo confluence here. So ideally, what we're looking at would be to target this area, enter a sell, stops put above both of these Fibo retracement level, and targets would be, ideally our target would be this level over here, because right here, this resistance here is very strong. You only broke through once, and after resistance breaks through, what does it become? Support, right? So if you draw a level here, it will be a pullback support, and you can see price actually tapped your entry, came down, right, and immediately once it comes to this area, it went back up, back to this same entry point. I mean, if you missed it out and didn't close your trade, you will still be running and run in profit all the way. But if you were able to see, usually scalpers will monitor their trades pretty often because they are always in and out quickly, right? So it's a scalper's job to monitor the trades every. I'll say if you're trading on a 5 minute time frame, monitor every 10 minutes will be good, because price wouldn't move so quickly in 5 minutes if there's no news, right? So don't really have to monitor every 5 minutes, but I would say 10 to 15 minutes, and then you can see if your trade is improving towards your TP level or hitting a stop loss soon. Okay, so we have the combination of Vivo retracement, pullback, and Ichimoku club, and also your descending trend line over here. So all these confluences, right? If price reaches this area, of course you are looking for sells because you can see right here, first point of contact right here on the trend line. So you wouldn't draw just one. If there's only one point, right? There's no point to draw a trend line, but you must have at least 2 points. Okay, so you draw a trend line right here, and then your Ichimoku cloud tells you that it's continuing its bearish momentum because price is still within the bearish Ichimoku cloud. Okay, so once price reaches your trend line area, and then let's mark out areas whereby you can see. Okay, we have your Fibo. If you draw from this high all the way to this low, you can see that there's the 28.2% Fibo retracement level right at the point where price is most likely to touch this trend line. Okay, so once price touch this trend line, then you can look for sells because you have your three confirmations. Firstly, your Ichimoku cloud. Secondly, your trend line. And thirdly, your Fibo retracement level. Right, so your target would be your stops placed above this trend line. Okay, your target right here. Imagine that right here, resistance, right? You draw, breakthrough, resistance breakthrough again becomes what? Support, right? So your target will be this area. Okay, so you can see price definitely went past way past your take profit level, but sometimes because you're a scalper, you don't have to be too uptight about all this because you always have opportunities to enter the market. Not like your day traders or swing traders where they are super patient and waiting for when price reaches a specific key level, usually major key levels, then they look for trades, right? But for scalpers, it's very frequent for you to look for trades, and you're always able to find opportunities. Okay. Also, you can see right here if you use the stochastic oscillator, right? You can see right here, price has reached this area whereby it's the highs. Each time you can see if when price touch the trend line, right, is the peak of the highs right here at 99.19. So if price comes up to touch this trend line again, right, with all your different confluences and then plus your stochastic, right, this adds more confirmation that is a perfect sell. Okay, so because it's highly unlikely for price to actually break past these highs, but more of respecting these highs, and then you can look for your TP levels first. You can close. If you like, right, some scalpers I know they have different take profit levels, even though um their trades are only maybe 30 pips. So they secure 10 pips, 10 pips, and then 10 pips, right? So each time you secure 10 pips, you would trail your each time you secure your first 10 pips. So for example, if you exit in your first you close 10 pips already, right? You shift your stop loss to break even, and then once you hit your second 10 pips, you will close half of your position and then let the rest run to your last take profit level. Because if price goes against you, at least you're already securing profits. All right, so for the last strategy itself, we'll be going through the Nike tick strategy. Okay, so just a very quick recap. I'm not sure, really sure, too sure on how many of you actually know about extension levels or projection levels. So if you guys have tuned into the Fibonacci series, can I get a maybe a yes in the chat box below to see how many of you actually understood this extension, oh sorry, attended the extension and projection Fibonacci series. But if not, if you're more if you don't really understand this, right, don't worry, just stop me anytime if you are unclear, because I'll be able to go through with you guys on how you can improve. Okay, no worries. Okay. Yep. So let me see. Yeah. Okay. So for example, let's say your starting point is right here, right? This highs over here. Your ending point is targeting this low here. All right. So the Fibonacci retracement part is very simple. So your highs are your 100%, right? Let's say your starting point here, which is 100%. Your ending point is your 0%, right? And then your middle are your key Fibonacci retracement levels, and then your extremes are your 127.2%, your 161.8% extension level, as well as your negative 27.2% expansion and negative 61.8% expansion levels. Okay, so these are more basic. Okay, what comes next will be more complicated, right? You can see right here, if this is your starting point, this is your ending point, right? So once price looks like a Nike tick, you can see right here, starting point here, highs, lows, right? Then price is bullish all the way. So once you see that price is bullish all the way, looking like a Nike tick and surpassing your starting point, right? Then you start to draw your 127.2% extension level as well as your 161.8% extension level, right? So the first obstacle that price needs to go past would be your 127.2% extension level, right? But you can see right here for euro dollar on the 15-minute time frame, we can see that price has already went past the 127.2% extension level, which is maybe I would say around here, right? It started rejecting off it and then started to break past it, right? Then after that, your next so let's say you are down maybe 1% here, but it's okay, don't give up, because we still have another obstacle, which is 161.8% as extension level, right? So you can see right here, price actually respected this 161.8% extension level and went down all the way. So the goal of let's say once price reaches here, right, your main goal is to recover your 1% that was lost here. So ideally, it would be good if you target 1:2, so you can recover this 1% and still be up 1%. Okay, so but if you know that this level is very strong for sales, meaning that you know that price will reject off this area and come all the way down because of this liquidity area over here, right? So let's say you're entering here, your target is 1:3 first, right? So you hit your 1:3, and then once you know it, that is breaking key levels, it's possible to take a sell again. So you can not only look for re-entries, right? But you need to look for re-entries at the right time and at the right area, right? So you see your main area is right here. So if let's say you hit a 1:3, maybe around here, right? Then don't immediately sell again, because you don't know, you don't have any confluences, you already close your trade and you're already in profits, right? But once you know that price reached here again, right, at your previous area of interest that you're looking at, then you could maybe risk 0.5%, enter again, maybe 0.5% risk, and your stop loss will be placed above these highs over here. And then your target is also 1:3. So at the end of the day, you lose 1% here, you're down 1%, right? You enter right here, go 1:3, so 3% profit minus 1% loss, you're up 2%, right? And then here comes another opportunity. You sell here, risking 0.5% only. So your target is 1 is to 3. So 1 is to 3, 3 times of 0.5% is 1.5%, right? Plus your 2% profit previously here. So total, you're up 3.5%. And that is a really pretty good for a day, and you're only scalping on the 15-minute time frame. Okay, so you have to find out what works best for you and fine tune it accordingly, because usually for me, I used to scalp a lot. Like I'm a very frequent scalper. So I used to be in and out because I have a very specific scalping strategy, only on 1 minute, 3 minute, and 5 minute. Right? So I only look at this, and for only euro dollar, um and GJ, right? GBP, JPY. So these are the only two pairs that I look at, and yeah, but even though it's more exciting, but it's not as rewarding as if I hit my take profit of a swing trade. So nowadays, usually because I'm so busy with work and stuff like that, right? So I have my own commitments as well. So I can't really stare at the charts maybe so often, right? Because even though sometimes like you know that okay, maybe this trade will work out, but there's always that fear factor, right? Like I don't know if you guys have it the same way, but there's always that fear factor. Like, what if I'm risking maybe 2% and it actually hits my stop loss? So now I have to look for another trade to cover back that 2%, right? So usually sometimes hesitation, has those people that usually hesitate a lot, right? Um, won't be able to scout really quickly, really efficiently and well, because of this kind of fear factors. For example, like myself. So that's something that I realized in the long run, and I transitioned to day trade because scalping is not as, it doesn't make me feel as calm, right? Because yeah, because day trading actually uh is more of few hours, right? So you don't really have that much of the fear factor, and if you are confident enough with your strategy and your confluences, then you're able, yeah, right. Because anything can happen suddenly. Yeah, that's why. So uh scalping ranges from a person to person. Like different people have their own mindset, right? But I would say if you're more risk averse, means you're leaning towards risk, you're okay with handling risk, then scalping is perfect for you, right? But for those that lean more towards maybe a more calm situation, then go for day trading or swing trading. Okay. Yeah, sorry, I drifted off a little bit. Just wanted to emphasize the importance of choosing your own trading strategy and what works best for you. Because what works for someone might not actually work for you, right? It's the same as a workout plan. It's very simple. With news, times my pending orders are often changed and I lose. I don't know why. Uh, with news, times my pending orders are often changed. Okay, so ideally, if you're not that familiar with maybe the whole FX market and the different news, right? Because sometimes I understand that, you know, um, give me a second. Yeah, because for news wise, right? Even though there's a lot of market volatility, but if you don't really have a base understanding of the fundamentals and how different news affect different pairs, right? It'll be difficult for you to capture the buys or the sells, right? Because for example, if let's say interest rates, right? USD increase on the Fed chair say that they would like to increase interest rates uh to zero from 5% to 6%. Okay, so it's a 1% increment, right? So at that point of time, you already know that increasing of interest rates will cause DXY to go up, USD currency to go up. So you're looking for sales on Euro USD, GBP USD, and gold. So all these basic fundamentals would be helpful for you, and that's why I think maybe that contributed to um, lesser lesser consistency. But if you want to reduce losses and stuff, my recommendation would be to only trade after the news, because this would allow you to um, feel more at ease when you're trading. And then because for news wise, right? Sorry, excuse me. Okay, because for news wise, you should always remember that news always have very very big candles, right? If you guys notice, like the candles are always huge and very they are like engulfing candles. They are always um super quick. So for example, if you guys notice, sometimes the candles will just blow past, let's say sales, right? You'll just blow past all the way and then retrace back up, then come down again, retrace back up. So at that point of time, it may actually give you like heart palpitations. Like, I'm not even kidding, like sometimes that time I had this position on gold, which is, I think the lot size was maybe easily 8 lots. Like, so for every pip for gold, right, you're risking 80 USD. So I think it gold actually went down. I was in a buy. So gold actually went down 40 pips. So straight away I was down um 80 times 40, right? Which is about a few thousand. And then after that it reaches back up. So I was back to break even and then profit again. So during that period it was like a very traumatizing. I would say I wouldn't say traumatizing, but more of like I learned my lesson kind of situation whereby even though I didn't really make a loss, but I was just lucky that the markets was in my favor and I wasn't able to, I didn't lose that much. Oh, sorry, I didn't even lose, right? But it was just a mistake to uh put that much of a lot size during news. I mean, if you want to trade news, you can put a smaller lot size, right? Risking a 1% only. Okay. All right. So yeah. So just to carry on this strategy, okay, starting point is always this high, too low, and then you should see right here if price is either approaching 127.2% or 161.8% FIVO extension level. Okay, so right here you can see price actually reacted to this 161.8% FIBO extension level right here. Not once, but twice. So if you miss your first entry, it's okay. Sometimes the markets are nice, right? They can give you a second entry, right? So price rate didn't respect this 127.2% extension level, but respected the 161.8% extension level instead. Okay, you can see right here, price tapped, came down, right? At this point, you will have already entered your take profit will be around this area right here. So you can see right here, after a while, I would say maybe, let's say for each candle is 3 minutes, right? You will have reached your trade in 1 hour's time. Okay, so for the Nike tick strategy, right, you have your time frames M30, H1, and H4. Usually for H4, I wouldn't go all the way to H4, but uh, if you were to scalp, right, I would recommend M30 and H1. You could still maybe draw on the H4 for a clearer view, right? You can draw because it has lesser candles and you're able to see the highs and the lows better, right? Yeah. So if let's say you were on the H4, you drew out the um extension levels right here. Okay, so your entry criteria will be at this 127.2% extension level. Okay, your stop loss, you can place it. I wouldn't place it above 161.8% extension level because it's too far and you wouldn't want to risk so much, right? So 145% is your stop loss area. Your ideal invalidation would be 138%. So what ideal invalidation means is that if price, let's say it goes to 138.2%, which is halfway to your stop loss, right? You should know that more or less um price would go to your stop loss sooner or later. So but if price manages to come down, right? Then just exit at your entry because um it's not really a good trade anymore and price will actually could possibly go up even further. Okay, so that's just one possibility. So break even is 11% of your recent move. So let's say I wouldn't keep it at 11% of recent move, but more of it actually runs 1:1, then shift your stop loss to break even. Very as simple as that, right? So 50% take profit once you reach 1:2, right? As mentioned previously, and full TP is your remaining positions all the way to your 1:3 ratio at the end. Okay, so you can see right here, you can see, yeah, fit projection. Yep. Okay. So if you draw a projection as well, right? You can see this low to this high to this low, and then we have your 100% feeble projection right here. Okay, which is aligning with your 127.2% feeble extension level. So this area, right? You have your feeble confluence, which will allow price to drop down here. Okay, so if you targeted 1:3, you're not greedy, you're aiming 1:3, you would have aimed, you have managed to hit your TP pretty quickly. Okay, you can see right here, right? Once this was a resistance level, price broke past. Okay, so once it reach price broke past, you know that price could go down further, so you could possibly hold your position. So sometimes for scalpers, you don't really have to stick to just maybe your fixed 1:3, 1:2. You can also look for different key levels and adapt accordingly. All right, so for your long example, it's very simple. So basically, you have your 61.8% feeble projection right here, aligning with your 127.2% feeble extension level right here. So once you see this, right, you're aiming for you're aiming for buys, right? So then your where will your stop loss be? Your stop loss will be beyond your this area. Okay, so sorry guys, nose has been acting up. Okay, so let's say you enter a buy here. The stop loss will be placed either beyond the 145 percent feeble extension level, or if you want to place it tighter, place it slightly beyond the 127.2% feeble extension level. Okay, so this will allow you, if you put it at a 145%, right? Um, definitely you have to target more because if you're targeting 1:2, targeting 1:2, right? Is probably around this area right here. But if you tighten your stop loss, there's a risk of you being stopped out. Okay, so I think you guys have also experienced this quite a few times, whereby once you got stopped out, price actually went in the direction that you initially wanted it to. So in order to avoid that, give price more space to breathe, and then you'll be able to watch your trade go in the direction that you want. Okay, so we also have this short example. Okay, as you can see at this area, we have your 127.2% Fibo extension level aligning with 100% Fibo projection level, right? So it's like the previous example, right? You can see right here, price actually respected it very nicely and came down all the way to these levels over here. Okay, and um, sometimes if you don't know if price will actually continue falling, right, you can look for chart patterns. So if you could see right here, this is your head and shoulders pattern, right? So what does head and shoulders pattern mean? Bearish reversal, right? So if you see this pattern formed and you're already in a short right here, right, you can possibly hold your trade for a longer period of time. So you can always adapt to the markets and maybe transition from scalping to day trading based on the markets itself. For example, you want to hold your trades for a longer period of time for that particular trade because you know that price could potentially um, fall even further. Okay. Yep. So we still have some time. Let me just go to the charts itself and let me just demonstrate for a little bit. Yeah. Um, Give me a second. Let me check. Okay. Let's see. Okay, let's go to 15 minutes. Maybe let's go to a random pair. Okay, so let's do some let's do some quick back testing. Let me see. Okay, price hasn't been too nice lately. Let's see. Okay, maybe let's use this as an example. Okay, so for example, let's see if we see right here, right? So if let's say I'm on a 15-minute time frame, I can see right here that price is making was in a bearish momentum previously, right? So my bias, my bias right here at these areas is still a bearish sentiment because price has been bearish for quite some time. Okay, so in order for me, so my if let's say my bias is sells, right? So I'll go back to these levels over here. Oh, where was it? Let me see. Okay, yeah. So let's say let's draw this out and see if it. Yeah. Okay, let's just use this example. Okay, so my sentiment is bearish, and I have a key resistance level here. So I know that if price So I'll draw from here to here. My resistance level is over here. Another key level is right here, right? Support break, support break. Then what will it become next? Resistance, right? So this is my resistance, right? So I'm assuming that price is around this area already, okay? So I would say that, let's say price is around this area right here. Okay, so price is around this area right now. Okay, and then I draw my Fibo areas. All right, so let's say I'm looking at yeah, so let's say its price is already here, right? I have another key level right here. Okay, I'll say this area right here. All right, near to the 61.8%. Okay, so if I were to target, let's say I look for, I'll just do it blindly, right? So if I were to enter short sale, I enter this candle, my stops above this highs right here, 10 pips, right? So I have to target one, let's say I'm targeting 1:2. Okay, fixed 1:2, right? I would have been stopped out. Okay, I would have already been stopped out quickly, right? But if I were to enter here, right, at this key level over here, my stops put above, I'll say, let's say 10 pips, right? So I'm targeting 1:2, right? So previous trade I already have lost 1%, right? And then now I let it run, and then I'm up 2%. So 2% profit minus 1% loss, which is total of 1% profit. So you can see right here that Fibo and your levels, as well as, let's say, okay, Ichimoku cloud not really working here. All right, so your key levels and Fibo must always work hand in hand with each other, and it will be very, very effective for scalping on the 15-minute time frame. Okay, so this is just some tips for you guys. Okay, so yeah, uh, okay, so we've come to the end of our series for the first part of the series, but could you guys do me a favor? Could you help me to do this poll? Um, Let me just launch this poll. Okay, I'm distributing the poll right now. Before I end the webinar itself, could you guys kindly help me do this poll, and to it's for me to collect my responses. Okay, and of course, if you guys have any feedback for this webinar, please feel free to let me know, or just type it down in the question box, and then I will take note of that. Okay, and yeah, so just maybe a few minutes and for everyone to vote, and then those who have voted, thank you guys for coming, and I appreciate the questions, and for you guys being attentive, right? No, I don't have a Telegram group, but yes, I'm doing live trading sessions every Monday for XM. So please feel free to tune into the um, live trading session. Yeah. Okay. Only 50% have voted. Yes. See you on the next session. Take care. Yeah. Can the rest? Oh, yeah. Okay, it's increasing. Can the rest help me vote, please? Thank you. Yes, of course. Yes. Good luck to you. I hope you can profit. All right. Okay, I'll end the webinar off right now. Okay, thank you guys. Goodbye.